Welcome guys to this mentorship episodes. So this is gonna be episode 4. Before we have 3 episodes. Before going to this video, I would really love to request you if you miss any of the previous videos, please watch them because this is for the beginners, and if you are the beginners then you have to go step by step. Without watching previous 3 videos, don't watch this video because it's not gonna make the things clear to you. So give a bit time for those videos, watch them, try to understand what I talked over there, how I explained over there. After watching them and fully understanding them, come here to watch this video. Now, before going to this video, make sure that you have leave a like and subscribe to our channel if you are new. In last video, we have talked about the liquidity, how to mark the liquidity. In this video, I'm going to explain more about the liquidity. There is 3 types of liquidity, which is one is relatively equal highs or the normal liquidities, normal buy side liquidity, relatively equal lows or the normal sell side liquidity. Then we have obvious liquidity and the strongest liquidity. I will draw this first and then I'll go to the chart to show you how to mark them. Next episode, I will explain how to use these liquidities. Okay, so let's go to this video. Here, if you see, there is two high. There is a swing high and another swing high which is near to that swing high, not above that swing high, below that swing high, but very near to that swing high, not exact high but very near to each other. Okay, so this is going to be our buy side liquidity, which I will call them relatively equal highs or the buy side liquidity. So I will write them as a normal highs or buy side liquidity. Okay, so relatively equal highs or normal buy side liquidity. This is gonna be our normal buy side liquidity. Same thing for the sell side liquidity. There can be a swing low and another swing low that will be very near to that swing low. It's gonna be our normal sell side liquidity. So I'd love to write it normal sell side liquidity. Okay, so here this is going to be our sell side liquidity or normal relatively equal lows. So I'll copy this, C, and Control V. Normal relatively equal lows or normal sell side liquidity. Sell side liquidity. So this is the first type of the liquidity where you will see one high will be very near to another high. It is not going to take that high or it is not going to go over that high. It will be very near to that high, very near to each other. Okay. Same thing here. It will be very near to this low where we will see the relatively equal lows or normal sell side liquidity. This is the first type of liquidity which is gonna called relatively equal highs or normal buy side liquidity. Now there is another liquidity which is called obvious liquidity. Now the obvious liquidity is this high will be taken by a shallow run. The bodies are not going to close above that high. Body has to close at the level of this high or below this high. But the wick will go above that high and it will take that liquidity. Okay, this is called obvious liquidity, which I will write down here. Obvious buy side liquidity. This is called obvious buy side liquidity. Same thing here. If you take a look here on this sell side liquidity, where market will take this low by a shallow run. Body has to close at the level of this low or above this low. Okay, so it can't close below the low. The body should not close below this low. Wick will take the liquidity or that low will wick will take that on. But the bodies are going to close above that line or at the level of this line. Now the wick can go a bit higher, but if we come here, it's not gonna be the obvious liquidity. Okay, it will be like sweeping the liquidity by the wick, not by the body. Same thing here. Wick can't be too much lower. It will be a bit lower of that low, which is gonna be look like a shallow run or sweeping this low by the wick. Okay, In this type of situation, I will call them the obvious sell side liquidity. So that's gonna be the obvious sell side liquidity. Let me mark it. I'm going to give both of this example over here, and then I'll go to the chart to give you the example. It will be absolutely clear to you. So that is called obvious sell side liquidity. Now this obvious sell side liquidity can be happen like this way. Here this is relatively equal lows, and then market go higher and do this thing, sorry, this is relatively equal highs, and then market went higher and take those relatively equal highs by a shallow run. It can be happen like this way, or maybe another swing high it has made, then market come here and take that highs by a shallow run. So how many highs over there, that doesn't matter. Finally market is going to take the extreme high by a shallow run or by the wick sweeping the liquidity. Same thing over here. It doesn't need to happen by just too low. It can happen by lot of lows. Okay, so something like that. It can come here one more time very near to this low, maybe come here one more time, and then finally it sweep the liquidity by a shallow run. Bodies are going to close above this line or at the level of this line. Wick is going to take that low. So this is gonna be the obvious sell side liquidity. This is going to be the obvious buy side liquidity. Again, it can happen by next swing high, or it can happen by after so many swing highs. It doesn't matter. Finally, it is going to sweep the high by a shallow run. Then we are going to say this is the obvious liquidity. Now, if you see over here one time and then market come back again and take this high by again by shallow run, it is not the obvious liquidity. So this high has taken over here by a shallow run or by a wick. Okay, by a wick. Then you saw another high went higher and take that high by a wick, but body has closed over there, but wick has taken that high as well, another swing high. It's not called the liquidity anymore. The liquidity has been done. It is not going to mark to be an liquidity. It's not gonna be our liquidity anymore. So obvious liquidity can happen one time. Excuse me. Same thing for the sell side liquidity. First time obvious liquidity or sweeping the liquidity by the shallow run or by the wick is it is acceptable. But next time if market come here one more time and take that low by another sweep or another wick, no, it's not liquidity anymore. I'm not going to see this as my liquidity anymore. It's not my liquidity anymore. I hope it is clear to you how to mark the obvious liquidity. At the same time, if you see this low has taken by the body, that means the body has closed below this low, or the body has closed above that high, not the wick, just body has closed above that high. It's not gonna be my liquidity as well. Okay, it's not gonna be obvious liquidity. So body has to close. It's the most important thing. Body has to close at the level of this line or below this line. One tick above that line, body close, it's not the liquidity anymore or not the obvious liquidity anymore. So I hope this is clear to you. This is the second type of liquidity, which is called the obvious liquidity. Now I will give you the example for the third type, which I call strongest liquidity. What do I mean by that? You saw that there is relatively equal highs or maybe obvious liquidity. Okay, so maybe something like this, obvious liquidity over there, maybe by three candle. Okay, maybe by three swing high or maybe by two swing high, whatever it is doesn't matter. Either it will be relatively equal highs or maybe it will be obvious liquidity, doesn't matter. When you will see relatively equal highs or obvious liquidity market has built, I have marked it as my liquidity level, and then market fall, come back again very near to this liquidity line, very near to this line. Okay, maybe one handle it will miss to take that liquidity for one handle, or maybe five handle, very small. Okay, but it will be very near to that line, or either this obvious or the relatively equal highs. All both of them are acceptable for the strongest liquidity, and then it fall again. This I will call as my obvious, sorry, strongest liquidity. So I'll mark them as strongest buy side liquidity. This is the third type of liquidity, which is called strongest buy side liquidity. Same thing here for the For the sell side liquidity, if you take a closer look around this area, maybe this is your sell side, I mean relatively equal lows, or maybe this is the obvious liquidity. It doesn't matter. It can be anything. And then market go bit higher, come back again. This is gonna be taken, this is gonna be taken, but market come very near to the sell side liquidity level and then went higher again. Okay, I mean went so far from this liquidity level again. I will call this the strongest sell side liquidity. So I'll mark it as my strongest sell side liquidity. Here, this should be the sell, the double sell. This is called the strongest sell side liquidity. So there is three type of liquidity you have learned. So first of all is relatively equal highs or the normal buy side liquidity, which can be by 2 swing high, 3 swing high, 5 swing high, doesn't matter. It's gonna be the relatively equal highs, which is gonna be our normal liquidity. The second one is obvious liquidity, where market is going to take the extreme high by a shallow run, okay, by the week. So it's gonna be our obvious liquidity. And finally, we have the strongest liquidity, where either market will make the normal relatively equal highs, then it will go far from this area, then it will come very near to this area, then it will reject from there again. It will start to fall again. Okay, this is called the strongest liquidity. Same thing for here. It either the first one is relatively equal lows, which is our normal sell side liquidity, or relatively equal lows, this is normal sell side liquidity. Then we have the obvious liquidity, where market is going to take that low by a shallow run or by a weak body are not going to close below that low, which is going to be our obvious liquidity. It can happen by 2 low or 3 low or 5 low, it doesn't matter, but this is going to be the obvious liquidity. And finally, the strongest liquidity, where market will make relatively equal lows, then it will go far from this area, then it will come back again very near to this liquidity level, will fail to take this liquidity for a bit, okay, for a little movement, maybe 5 handle, maybe 1 handle, maybe 1 tick, just it will miss this area and it will go far from this area again. Okay, this is called the strongest liquidity. The reason to mark them until it is relatively equal highs, that will be my direction. Until it is obvious liquidity, that is gonna be my direction. Until it is the strongest liquidity, that is gonna be my direction. Same thing here, that's gonna be my direction. That means when market will go far from that area, I will keep looking for that liquidity as my target. So if you watch the last video, you already know how to choose the liquidity level and how to use that liquidity level. Now you have learned three type of liquidity in this market. Next video, I will explain how to use each of the liquidity, how to use them. Now let's go to the chart to see the example. Okay, so over here I would love to use this area. Now you can see there is a high and high. Two high is over there, which is relatively equal highs. Okay, so here this is that relatively equal highs, which is called our normal liquidity or the buy side liquidity, which is this one, relatively equal highs or the normal buy side liquidity. Now if you see this high and that high as a relatively equal highs, and here if you take a closer look over there, this high has taken over here by a shallow run or by just a bit. See, it has taken that high but just a bit, but body didn't close, body is over here. Wick has taken that high. This is called obvious liquidity. Okay, so first this high and that high, they were the normal or relatively equal highs, or if you take a closer look over here, these are relatively equal highs, and market has taken that relatively equal highs by a shallow run here. Okay, it has taken that relatively equal highs by a shallow run, which is called the obvious liquidity. Now I'm going to mark this one so that I can give you the example of the strongest liquidity as well. So all you know how to mark the relatively equal highs or the normal liquidity, then this is called the obvious liquidity. And finally, you will see that this market came very near to this liquidity level. Here, look at this high. It came very near to this liquidity level, very near. It seems like that going to take that liquidity, but it has failed to take that liquidity. Then market went to the opposite direction. This is called the strongest liquidity. Now I just gave you the example for the buy side liquidity. You will look for the sell side liquidity by yourself. This is your job or this is your homework. Go in different time frame, 5 minutes, sorry, 15 minute, 1 minute, hourly, daily, weekly chart. Go over there, try to mark and differentiate those three types of liquidity. First, relatively equal highs or the normal buy side liquidity. Second, obvious liquidity, which is just a shallow run. Market will take that high just for a bit. Okay, this high can come until this area. There is nothing wrong, even if it come here. But if the high come here, the wick come here, it's not the obvious liquidity anymore. So it should be looks like some kind of logical, something like here I showed you, right? This highs has been taken over there. These highs are being taken by that shallow run. So if you forget about these highs, just think from here. Maybe this is your relatively equal highs. Okay, this is relatively equal highs, and market has taken that relatively equal highs by a shallow run. Here, see this shallow run. This is called obvious liquidity. Now, this high didn't take that high, so still this is valid as an obvious liquidity. This is still valid as an obvious liquidity. And then finally when market came here, this, I mean, if you mark the highest on upper one, then you will see this is the strongest liquidity from there. If you understand this video, it is gonna be very helpful for the next to understand the next video. If you don't understand it, just let me know to the comment box your confusion. I will try to clear your confusion, but make sure that you have understand all three types of liquidity. Now you don't need to focus a lot how to use them. Just focus if you can identify those type of liquidity in the normal market. So if you can do that, then you have already done a good job. I'll come to the next video and I'll make sure that it's absolutely clear to you how to use those three types of liquidity. So guys, don't forget to let me know your confusion, and until the next video, cheers.